Greetings, members, one and all of the Salivation Nation. Gold and silver pullback didn't last very long. Let's explore. We saw a little dip in gold and silver prices earlier today, but there is a rebound as the bulls buy the early dip in this article here from Kitco News. Jim Wyckoff, the author here. Very interesting indeed. Let's see what's going on. Gold and silver prices are slightly up in U.S. trading on Thursday as bullish traders stepped in to buy the earlier dip in prices. The technical charts remain firmly tilted in favor of the gold and silver market bulls. June gold futures were last up $2.60 to $1,884.10. And July COMEX silver was last up a nickel at $28 and about 8 cents an ounce. So U.S. stocks indexes were higher at midday. There's still a little bit of risk aversion in the overall marketplace late this week. Traders and investors are debating when the Federal Reserve will rein in its very easy monetary policy, following the FOMC minutes on Wednesday afternoon that included wording on the FOMC committee discussing tapering its bond buying program when economic conditions warrant such, but not yet. I think it's going to be quite a while before that happens. That's just my view. At the last FOMC meeting in late April, the Fed still believed rising inflation was transitory, and price action this week in several raw commodity markets makes the case for the Fed being correct on that assumption. All right, so let's see here. Price action in raw commodity markets believes that the Fed is correct. We'll see here. I kind of doubt it. I don't think they are taking into account other factors here. I think they've really gotten away with this far too long with this easy monetary policy. Quantitative easing here. Crude oil prices have backed well down from 2-month highs scored earlier this week. Copper prices have pulled back from a 10-year high, and grain future markets have swooned. Iron ore prices in Asia are also dropping, while U.S. lumber futures have dropped over 25% from their highs seen recently. Still, there are many veteran market watchers, including this one, Jim Wyckoff, that believe that inflation genie is already out of the bottle. I'm of the same mindset. To suggest generally rising consumer and producer prices for some time to come, and likely inflation that is problematic. And I believe it will continue to be the case. Bitcoin and cryptocurrencies have stabilized Thursday after a huge sell-off Wednesday that was precipitated by China stating it will not allow payment for goods and services to be conducted with Bitcoin. Wednesday's price action in cryptos reminds of the time-tested notion that major bull markets many times end when the rules of the game are changed. That's true, very true. The crypto world should indeed shudder when the globe's largest population and second largest economy that is state-controlled sees its leadership take a major step towards nullifying crypto's authenticity. And that's just it. Cryptocurrencies are at the mercy of governments and the regulations and how they will treat them. Right now, we're enjoying this kind of laissez-faire in terms of the cryptosphere and the unregulation thereof. It's nice, but watch the price move in the opposite direction when more regulation takes into account. And make no mistake, since fiat currencies are moving more towards digitization of some form or another, backed by likely a blockchain type of ledger system, well, you know, that's in direct competition with Bitcoin. Guess which one is going to win that battle? It's not going to be Bitcoin. The key outside markets today see the U.S. dollar index lower. Meanwhile, NYMEX crude prices are lower and are trading around $62.50 a barrel. So this is kind of on the back end of buying as the bulls buy the early dip. So what does this mean here for what happened earlier today? These routine pullbacks after surging to 3-month high was predicted that it would happen. They're lower in U.S. trading on Wednesday from an article earlier this morning. Downside corrections and uptrends, and after hitting 3.5 months highs on Tuesday. Don't be surprised to see gold and silver markets bulls step in to buy the overnight dips, and they did just that. He predicted it, and that's exactly what happened here. And so this is something that people are looking at, and they see gold and silver, especially with other commodities going down. This is that safe haven aspect of it. Bulls are coming in to buy in this time and this level, and this is what's going on here. So where are the markets right now? Well, you can see that gold, silver, and platinum are all up today. Gold is up almost a half a percentage point, up $8.30. Silver is up a nickel, still below 28, but it is starting to head back up in that direction. It's testing these high $27 levels, the psychological level of 28. If that can be held for quite some time, I think we could continue to see upwards momentum for silver. Platinum is up $10 to over $1,200 again. Palladium and rhodium are both down. Rhodium is taking some pretty big hits as of late, testing some lows that we've not seen in a while. So there you have it. The gold to silver ratio is hovering around the mid 67s because silver has not performed quite as well as gold did today. So it's still testing those 67 momentum, which can be frustrating for some. But I think if we continue to see momentum in the bullish direction for gold, silver will follow, as has always been the case. And but nonetheless, silver is seen more as a commodity. So I think that's one of the reasons why its movement has not been as strong in that direction, because of being pulled back as other commodities are going down while precious metals are going up. So there you have it. Very interesting news for the day. Gold and silver's pulled back. It didn't last long. Now, what can tomorrow bring? No one really knows. But more than likely, my guess is we're probably going to be in the same camp, and we may see slight gains again tomorrow as people continue to buy, and concerns about inflation being transitory. It's a very delicate situation right now with our dollar, and I believe that we could see potentially 70s style inflation again here in this country. And the Fed is walking a very fine line in that regard. But you know what? No matter what the Fed does, they are in the manipulation game, obviously. They want to try to steer the economy in ways that they think they can, but in reality, they have no control. When they implement tools that do more harm than good, sooner or later it's going to get away from them. And those of us from the Austrian School of Economics and understanding supply side, printing currency is not the answer to get our way out of these money troubles. And it just is not the answer. And so therefore, we hold real money, gold and silver. This stuff here has survived for centuries, for millennia, and will continue to do so no matter what the Federal Reserve does, and no matter the hubris that the dollar has around the world. It's obvious as the world's reserve currency, it is under threat. Some people say that within 20 years we may lose it if we're on the path we're on. It may even come quicker than that. We lose reserve currency status. If that happens, well, watch out. Because we don't have really, even though we do operate under the petrodollar system still to this day, it's not nearly as influential as it was when it was formulated by Henry Kissinger back in 1973. So therefore, we will continue to just do what we do and accumulate gold and silver as our budget allows. That's the way we become independent from that system, in a sense. Wealth that is defined by the innate nature of the metals themselves is a lot more comforting in my eyes than some paper dollar that will degrade year after year, and has done that for centuries and will continue to do that. Well, it's done that for over a century, I'll put it to you that way. But the dollar, really, in a sense, anytime it's been paper, there was a lot more room for corruption, and it has been corrupted. Does that say that the a gold standard can't be corrupted. It sure can, but at least it provides some sort of restraint on the dollar and system. And some people think we are headed back to some sort of gold standard in some way, whether they fix the price of gold or whether or not they tie the dollar to what gold is. Just we'll see how it plays out, but that can be corrupted too. So there you have it. Let me know your thoughts on this video on this day. And the markets are moving quite interesting enough. If you hadn't had a chance to see it, I posted what I refer to as a legacy video this morning, and it's not really gained a whole lot of traction. But if you're interested, it's some advice on how you can buy silver and you can avoid the high premiums for 5 ways to be able to do that. It's an interesting video. Let me know what your thoughts are. And click that notification bell, and that's probably what happened. Notifications and the algorithms didn't catch that video. And so if they do catch this one, I want to remind you of that one I posted earlier today. I'll post it in the end screen of this video as well. So I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.